Welcome back to the deep dive. I want you to picture something with me for just a moment. Imagine a powerful spark. It ignites, and then it blossoms into two distinct flames, right? Both equally brilliant. That's really the image we're carrying into this deep dive today. We're exploring the recent catalysts that have truly energized the market for two absolute tech titans, Alphabet, Google's parent company, and, of course, Apple.
It really is a compelling moment, isn't it? And, our main source for this, a really sharp analysis from VWire's IGNIS, it captures this dual momentum perfectly. They use this vivid phrase, ah ha 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 ha.
Yeah.
It translates roughly to the flame rekindles with the ruling. And what's really insightful, I think, is how this big legal decision for Google and some genuinely exciting product stuff for Apple, well, they aren't just separate wins.
Okay, so they're interlocking somehow.
Exactly. They're creating this combined, really powerful upward trend. It's fascinating to watch.
And that's precisely our mission today, isn't it? We're going to, peel back the layers a bit, uncover the specific details behind this renewed market momentum.
Right.
And crucially, we want to connect these current events back to some earlier strategic insights from our sources, so you can understand not just what happened, but really why it matters for the bigger picture.
Yeah, getting beyond the headlines.
Exactly. We want you to walk away with those key nuggets that make you feel genuinely well-informed, maybe even challenge how you view these market trends. So let's start. Let's kindle that first flame. Google.
All right.
Okay, so the Google Spark. We've all been watching the antitrust concerns around Alphabet, specifically Google, for, well, quite a while now. And this recent ruling, it was definitely not minor news.
Far from it.
Our source puts it very powerfully, actually. It says the decision effectively removed a significant layer of risk, and that led to a noticeable gap up in the stock price.
Yeah, a significant gap up.
Yeah, not just a little bump. It feels like a real market reaction, signaling maybe a shift in how people are perceiving the company's risk.
And a key insight there, I think, is the clarity it provided. For investors, I mean. That core antitrust risk, especially those, lingering worries about maybe the company being broken up.
Yeah, that was a big shadow hanging over them.
Right. And that seems to be largely resolved now. And if we look at the specifics, a really critical outcome was Google getting to keep its basic search contracts.
That wasn't guaranteed then.
Not at all. And getting that affirmed, well, it directly strengthens their absolute core business. It reinforces that dominant market position in a really significant way. It's like they cleared this huge legal hurdle.
Okay, so that clarity, that relief,
Yeah.
it translated directly into market action.
Instantly. You saw that gap up. And then, as our source describes it, concentrated demand and supply, which basically indicates strong, sustained investor confidence coming in.
Right. But what I find really fascinating here, and you touched on this, is that it's not just about a knee-jerk reaction to the news itself.
No, it's deeper than that.
Yeah, the analysis makes this really important point. It says this outcome made the strategy laid out in an earlier posting, one from July 19th. It made that strategy even more persuasive.
Validation.
Exactly. It suggests that, instead of everyone scrambling for a new plan, the market is actually validating an existing, well-thought-out strategy.
It really makes you think about the power of that longer-term strategic thinking, doesn't it? I mean, how often do we see a strategy that was laid out beforehand get validated so directly by a big external event like this?
It's pretty compelling.
And then you add in the financials. Beyond just the legal relief, Google's underlying strength is, well, it's undeniable. You've got ad revenue up a solid 11% year over year.
Still strong.
Very. And cloud revenue soaring up an impressive 32% year over year.
Wow.
But what really stands out, I think, is their cash position. Abundant cash reserves. This isn't just about weathering storms. It's a strategic launch pad.
For what, specifically? What does that enable?
Well, continued long-term growth, obviously. But especially as they double down on these high-stakes areas like, artificial intelligence, it gives them immense flexibility, a real competitive edge.
That cash reserve isn't just a safety net. It's fuel for innovation. And looking at the market rhythm, our source describes Google as being in a rhythm diffusion phase. What does that mean exactly?
It suggests that with the policy risk eased, you're seeing a more stable upward trend emerge. It's consistent with what some technical analysis like Elliott wave theory calls an expanding upward wave.
Elliott wave. That's about market cycles patterns.
Essentially, yeah. It describes these cyclical trends, suggesting a more methodical, less frantic ascent. It implies the rally might be more structured, more sustainable, not just hype.
Okay, so it reinforces the idea that this isn't just speculative excitement. It's based on something more fundamental.
Exactly. It points towards underlying strength driving these moves in a more, let's say, predictable and sustainable way. It validates the company's fundamental position, stability, and a clear path forward.
So one powerful flame, Google, definitely burning brighter now. Less risk, validated strategy.
Yeah.
It's almost like they shed a heavy backpack full of policy risk, right?
Right.
And now they can move more freely.
That's a great analogy.
Okay, now let's turn to the other titan, Apple. How are their distinct ignition points adding to this combined market heat? They seem consistently driven by, what does the source call it? New product events and strong service revenue.
Absolutely. Apple's momentum is definitely fueled by, well, a dynamic combination of things. You've got, of course, the constant anticipation around new product announcements. Those events always generate huge buzz, global attention.
Always. The rumor mill never stops.
Never. But what's becoming increasingly significant and strategically vital is their service revenue. It hit record levels again.
That really underscores how they're moving beyond just selling hardware, doesn't it?
Massively. They're cultivating this really diverse, highly profitable revenue stream from subscriptions, apps, all sorts of digital offerings. And let's not forget, stable iPhone sales are still the bedrock.
Right. That provides the foundation.
A very solid foundation, a consistent, loyal customer base for all those growing services.
So it's clear they're not just, resting on their past successes. And similar to Google, it seems Apple's recent performance also lines up really well with prior insights.
It does. The source highlights that the momentum we saw emphasized back in an August 23rd analysis, specifically driven by new products and services, that momentum has combined with the sort of broader positive market feeling.
Catalyzed partly by the Google News, perhaps.
Possibly contributing, yeah. And it's strengthened their upward trend even further. They're clearly executing on a longer-term strategy. That innovation engine is definitely humming.
And what about looking forward? Any signals there?
Well, connecting this to the bigger picture, Apple's announced these large-scale investment plans within the U.S. That signals strong confidence, right? A clear vision for future expansion. Not just maintaining, but really growing their market presence.
And the market rhythm for Apple. Is it similar to Google's diffusion phase?
A bit different. The analysis suggests Apple is more in a rhythm-rising phase, especially leading up to these new product events. It's supported by what the source calls an event momentum-based upward wave.
Meaning the anticipation itself is a driver.
Exactly. The expectation itself pushes the stock higher, anticipating future success from those announcements. It's a well-known pattern with Apple.
So, okay, on one side we have Google shedding risk, strategy reinforced. On the other, Apple innovating relentlessly, diversifying income, strong product and service momentum. It really is this synergy of two powerful flames, isn't it?
It really is. Our source puts it succinctly. These two forces are kind of interlocking to spark a powerful ascent. It's like seeing two individual strengths combined to create something, well, maybe exponentially more powerful than just the sum of their parts.
That's a great way to put it.
And, maybe the most pivotal takeaway here, connecting both Google and Apple, comes from our sources emphasizing how both cases really validate the importance of those previous strategic insights.
Right. This wasn't about finding something brand new.
No. The analysis repeatedly stresses that rather than seeking a completely new strategy, the key insight here is about reapplying strategies that were already presented in earlier postings.
And that feels like a really crucial takeaway for anyone listening trying to navigate this market. But let's dig in there a bit. Why? Why, in a world that just bombards us constantly with new info, the next big thing? Why is validating existing, well-thought-out strategies such a powerful idea right now? It kind of goes against that instinct to chase every headline.
It speaks volumes, doesn't it? Maybe it suggests a bit more maturity in the market, a shift perhaps from purely reactive trading towards a more fundamental long-term view.
Cutting through the noise.
Exactly. It helps investors cut through that constant noise, maybe build some genuine conviction in their positions, and perhaps avoid that trap of always chasing short-term gains, which, as we know, often leads to emotional decisions, less optimal outcomes.
So for Google, it means going back to that July 19th strategy now that the antitrust cloud has lifted.
Precisely. That decision solidified its foundation. And for Apple, it's about re-examining that August 23rd strategy, the one highlighting the new product and service momentum. It's not about finding the next shiny object. It's about recognizing the lasting value of a strategy that's already proving itself.
That's incredibly insightful. Discerning signal from noise, finding confidence in what's already working. But, okay, what about bumps in the road? The market rarely goes straight up. Fluctuations happen.
That's an important point, and the source addresses it head-on. The analysis clearly states that even with short-term adjustments, both strategies remain valid. What's more, both companies seem to show the structural tendency
Where dips are followed by rebound.
Right. Short-term adjustments are structurally set to lead to a rebound, is how they put it. And this feeds directly into that mantra we often hear echoed in the community and the chatter: a correction is an opportunity.
Right. Buy the dip, basically, if you believe in the long-term story.
Exactly. It encourages that longer-term view rather than panicking during those inevitable downturns. It's particularly relevant for anyone wanting to apply these insights practically.
That correction as opportunity idea really hammers home the long-term perspective. But of course, no company, not even these titans, exists in a bubble. While Google and Apple have these amazing internal drivers, we can't ignore the wider world, the macro environment.
Absolutely. Vigilance is always required there. When we connect this to the bigger picture, despite these really compelling company-specific positives, there are still significant macro variables, risks we need to keep in mind.
Like what, for example?
Well, ongoing interest rate policy is always a big one. That can impact broader market sentiment, the cost of capital. Then there's the persistent concern about a global economic slowdown.
Which could hit consumer spending, ad budgets.
Potentially, yes. And of course, AI competition. It's intensifying constantly. That's a factor all tech giants, especially Google, have to navigate continuously. All these things add up to a degree of, global uncertainty that smart investors never completely ignore.
So even with their individual strengths, they're still sailing in potentially choppy global waters. And speaking of how people feel, it's always interesting to get a sense of the community pulse. How are investors reacting?
Well, what's fascinating is how directly sentiment seems to align with these key events we've discussed. On big platforms like Reddit, Twitter, you saw a really significant jump in mentions of keywords like Google ruling and Apple new products.
So people were definitely talking about these specific things.
Absolutely. It shows these catalysts really captured the collective attention, became major talking points. And over on StockTwits, the dominant view expressed consistently was that a correction is an opportunity for both stocks.
Reinforcing that earlier point.
Powerfully reinforcing it. It shows that underlying confidence in their long-term paths, that strategic validation we've been talking about.
Yeah.
It really resonates with a lot of market participants out there.
Okay, so let's try and quickly recap this deep dive then. We've seen Google's antitrust resolution dramatically cut regulatory risk, powerfully validating its core business strategy.
Big weight lifted.
And at the same time, Apple's relentless new product cycle and, crucially, its record service revenue keep fueling its innovation engine and diversifying its growth.
Two strong engines firing.
Exactly.
Yeah.
And together, these two powerful flames, they seem to have created this reinforcing upward trend for both companies. It decisively validates those previously outlined strategies, sending a clear signal, maybe, that sticking with robust existing plans is really paying off right now.
It's a testament to sticking with what works, perhaps.
Which brings us to, I think, a crucial, maybe thought-provoking question for you, our listener. As you navigate this world just saturated with constant information, how much value do you place on recognizing and maybe trusting these enduring patterns, these previously validated strategies, versus that constant temptation to chase every new headline, every next big thing?
Yeah. What really stands out to you about how these specific events, the Google ruling, the Apple momentum, are shaping the market right now? And how might that influence your own approach to understanding future trends, making your own informed decisions?
It really comes down to discerning that signal from the noise, doesn't it?
Yeah.
And perhaps finding a bit more confidence in the strategies that have already proven their worth. Something to think about.